Alrighty. Oh, what was that? My bad. All right, what is going on, YouTube and Discord family, and welcome back to another edition of Top Down Analysis with me, T. Hobbs. Today is June 1st, 2025, year of our Lord, and it was a pretty tight week last week, right? Like for me, it was basically a little over break even week for me, right? Like it was a week of not following my pre-market plan, not doing the things that I know, that's made me successful to this point. And I talked about that a lot in the market review video from Friday, if you get a chance to check that out. But this week, as per usual, we're going to move on. Next trade, next week. Everything else is behind us. We're starting a new week, a new month. New information is coming into the market. We've been consolidating for a few weeks, and we're going to break down everything you need to know in regards to the top-down analysis here in this video. We're going to break down each individual future, 3 out of 3. I'll make a separate video for gold futures and micro Bitcoin if you guys are interested in that. We're going to break down the monthly, the weekly, the daily, and then I'll bring out my levels on the 4-hour, let you guys know kind of where price is going, and then we'll move on to the news and the catalyst for the week. That being said, let's jump right into the S&P 500. Moving over to the S&P, looking at the monthly time frame, we can see that on the monthly time frame, again, like I've been saying in every single video before, this was the buy, right? Like this looks more and more like this was the low of the market, right? Like you can see we tapped back into 2023 prices. We put in a nice aggressive pin bar candle down here, and then we supported it, which was more important, right? Like we supported this candle. We aggressively finished the month above that candle high, pushing into the candle that brought us down here and retesting these highs. If you wanted to be a bear, what you wanted to see is you wanted to see the market close this monthly candle back down below this open. And it just didn't do that. It didn't come near it, right? Instead, we closed more so toward the high, which is very bullish, right? We can take a look at the monthly and tell one thing and one thing only. When you're looking at price action, you got to ask yourself who's in control and who's in pain. I think it's clear to see that the bulls are in control, and anybody selling the market from this level are all in pain if they haven't closed already. Okay. Now, because we just finished the monthly time frame, I want to go over and look at the 3-month, because the 3-month also gives us a clear picture of where price is going for the full year. Notice over here we have 29 days left, which means we have one more month in the 3-month candle. You got to ask yourself, what's more likely to happen? Is it more likely for the market to reverse this entire 3-month candle, push back red and come back down to 2023 prices? Or is it more likely that we continue on the current uptrend and follow the 12-month candle, right? The yearly candle back to the upside? I mean, you can be the judge. I have my own thesis, but you can be the judge. It's just a question that you have to ask yourself instead of constantly spending a lot of time on those lower time frames. You got to take at least once a week and just zoom out to see what those time frames are doing. Moving down to the weekly time frame, the one thing that we wanted to see if we're bulls coming from this low, we needed to see these intermediate highs taken and then show some level of interest above these highs. Well, we got exactly that. This was our dealing range above the highs. The market came back. Not only did it stop here and give us this false doji candle, because I remember making a video saying, hey, if you're a bear, you can be semi-encouraged on this close because it's the top, it's a doji candle at the top of trend. That's what I would say. I said, but if you're a bull, what you want to see is us gap up and get back above this. And that's exactly what we did the next week. We gapped up, and since then, we haven't even closed that gap. This gap has just been sitting there. We gapped up, and now we're consolidating. So if you're a bull and you understand, the process of accumulation, manipulation, and distribution, then you understand that all we're doing is accumulating. We'll probably manipulate and close this gap. That's the nearest, area of interest. Consolidate, close this gap with manipulation, and then this is going to be the buy. It was very similar to what we talked about earlier, but just remember, we don't have to manipulate to go higher. Just for the record, we're in a strong uptrend. We could consolidate and count this as the manipulation, right? and then we could just gap up and go, right? Like similar to what we did here, we consolidated. This was essentially a manipulation when you look back on it, but we gapped up and then just kept going higher, right? So the market doesn't need to come back and fill this gap to go higher. I just want to make that very, very clear in regards to the weekly candle. To the bearish side, well, to be honest, I don't really have a case to be bearish right now. Like there's just no reason, in my opinion, to be bearish until some structural lows break, i.e. we can get below 55, 95, 75. But right now, that's just a pipe dream because I just don't see a reason for the market to come down here without bad news. Is this week going to be important? Absolutely. There's a ton of news this week. And again, we'll talk about that here in a moment. But until these structural lows start to break, even then, we've built so much structure on the way up that I just don't see the market breaking through this aggressive trend line, right? That we've been basically forming. If we zoom out, we've been forming this trend line since back in 2020, right? Like I just don't see the market giving up this trend without some aggressive reasoning for it, right? I've showed you on multiple videos, the weekly 200 EMA was right here, and it's very rare that we trade below it. And I don't think there's any amount of tariff talk that can make us fundamentally trade below that level and stay below it without some level of crisis coming into the market. Not to say that that can't happen. I'm just saying that that's what I believe it would take to trade below the weekly fib. All right. Moving on to the daily time frame where the constant berate of bullish activity continues. Look at all of these gaps that we placed on the way from what you would determine as discount. We had almost a 14% daily candle. Market came back into that candle, found more buyers, gapped up, left it open, push, continue uptrend, consolidation, manipulation, expansion, right? Gapped up again and has not filled any of these gaps. Will the market need to fill these gaps? Sure. The question is when, right? Like that's the real question, right? You can continue to believe that this is, somewhat of a lot of people will talk this weekend, right? Because I do a lot of, Discord shopping, not Discord shopping, but I do a lot of YouTube browsing, right? I'm the average person. I'm a person. And what do I see? I see a bunch of people talking about this right here, right? This potential double top. Let me tell you something about a double top, okay? This double top or lack thereof doesn't matter if we don't close below this level, right? If the market doesn't close below this gap, this is not a double top. This can be a, balancing act, because that's basically all it is. It's just consolidation, right? Essentially, all we're looking at is this low and this high consolidated. This is not a double top because we don't have a break of structure. It's simple as that, right? Now, if you want to play it like a double top, by all means, play it, but just understand that it's a scalp until proven otherwise. Me personally, I like to be patient and wait for that scalp to actually occur, especially when I'm dealing with the bears. And then honestly, I'm just going to long it back up, get out at this area, and then potentially short it if the market, decides it wants to compete with that area. But in regards to the daily, the weekly, and the monthly, everything is bullish, right? So what are we expecting coming down to the 4 hour? Well, if the market's going to continue to be bullish, there's multiple ways that the market will leave an area. Like I've talked about in multiple videos in regards to my top-down analysis, the market, the daily candle, the weekly candle, and now the new monthly candle, if we're going to remain bullish, you anticipate the market creating a wick, right? We have to create a wick for the weekly. We have to create a wick for the monthly, right? Which we could do anytime in the month, to be real, right? But you want to see the market trade down first, because that's what the market needs to do to create that wick. We have to come down to go up, right? So if that's the case, we don't have to necessarily do it on Monday. Be aware of that, but eventually we have to trade down first. So as we currently stand, right, we can gap up and go into this structural area here where we broke structure on the smaller time frame. We can gap up, even sweep this high, tap into these highs, and still end up trading down the rest of the week. That still would not make me bearish. That would make me bullish, because I would anticipate the trade down creating the wick on the higher time frame, i.e. the monthly and or the weekly. But from up here, it would not surprise me to see the market push up first in order to come down. So let's just throw that out there. So How do we read that? Well, for me, how I'm predicting the week to go this week, and by the way, last week's predictions were completely null and void because of the fact we stayed within range, which was my last thesis when I was like, hey, we're in between these two in-wogs. Don't be surprised if we just stay in range and don't hit either the bullish or the bearish weekly projections. And that's what we ended up doing because we're in between some major levels of liquidity, okay? We're in between a new week opening gap from the 18th of May. Below us, we have 11 May new week opening gap. We have 4-hour support. We have monthly fib. We have the weekly fib, weekly settlement, 4-hour supply, right? Daily fair value gap above us. This is an area of strong liquidity, both to the buy side and to the short side, right? So this is going to be an important level. So don't be surprised if we spend a lot of time in this area and the trades that you're taking, they have high resistance both directions, right? So just be aware that those are the conditions that we are going to be in until we either break to the upside or we break to the downside. It's going to be strong consolidation in this area, okay? That being said, if I want to be a bull, I want to see the market trade down first. So if we trade down, right below us, we have this in-wog at 57.56, right, from May 11th. We trade down, I'm looking for a rally up into 4.79%, into 6,030.75. That is our weekly projection over the last 8 days. If we trade down and we can't make it to the in-wog, then we have this 4-hour support right here that's basically coming from 23rd May. That support level sits at 58.42 or 58.43.25, however you want to put it. We'd be pushing back up to the upside 4.71%, breaking through this 4-hour supply zone, pushing into the weekly settlement, and then ultimately finish during the week at about 61.1875. Still not quite all-time highs, but again, a nice rally as it stands for now. And this level we don't need right here. Okay, so if we expect the market to be bearish, that does not mean I'm expecting to be a bear for the month or for the year, but the market can still have a bearish week. If the market is going to have a bearish week, then I'm anticipating a rally up to start a Tokyo session. We rally up, London makes the high or the low or the high up here, right? Inside of this 4-hour supply, I'm looking for the market to start its descend 4.5% back down to this in-wog at 57.4925. That's our first weekly projection from the 4-hour supply. In the event that we can't trade up to the supply zone, then I'm looking for the market to tap right to the top of this in-wog, which is 50% of this low here to this high here. The 50% sits right at the top of the in-wog at 59.4825. If we stop there, then I'm looking for the market to trade down into 56.72.75 or 4.63% weekly projection over the last 8 days. So that's how I'm viewing the S&P 500. Let's make our way over to the NASDAQ. And like I said, I will put chapters in the video so you know exactly where you want to stop at in order to view your particular instrument. All right, this is the monthly time frame on the NASDAQ. And like I said, the one thing that we note is the monthly candle has closed, and it has closed very, very bullish, just like the previous month before it. We got above the previous high. In addition to that, we got above March's high as well. And now the NASDAQ is already working on February's high, right? Which tells me that there's no reason to be a bear. Like, it's just not here, right? Like, you can be bearish if you like, right? But the market is ultimately moving up. Doesn't matter how you want to view it, whatever news you see, I don't care. The market's moving up until further notice, right? 3-month candle, 29 days, 4 hours left. What do you see? Strong wick at the bottom of the 3-month candle after retesting these perfect freaking highs right here, these intermediate lows right here. Couldn't even make it back down to 2022 price, which is the true gap that I thought we would go down to. I was wrong. Market pushed higher. And now what do you think the target is over the next 30 days? In my opinion, the target has to be all-time highs and even further, because to be quite honest, the market's only a day away, maybe 2 from all-time highs, because the close of this candle was 354, 21,354. All-time highs are at 22,612, right? So we're less than 1,200 points, give or take, from all-time highs. The NASDAQ can do that in a couple days, no problem, right? So Ultimately, if we're looking at the 3 month, then we got to incorporate the 12 month where we understand where the year is going. 7 months left, 7 months left in the year. This might have been the buy for the year. Okay. When we swept these lows, tap back into January's prices, this may be it. I do not see a reason for the market to come back down here without some type of war or catastrophe happen. I just don't see that at all right now. And the structure is not pointing to that. So that's the monthly time frame. Let's take a look at the weekly. Again, we could pop on that 200 EMA and we'll talk about that same thing we've been talking about for the last few videos, which is the fact that we have not traded below the 200 EMA, but one time in the history of the stock market, right? In the history of the NASDAQ anyway, and the S&P 500, we haven't traded below it. So when we came down here, this was what people were calling like a generational opportunity to buy, because it's very, very rare that we hit this level and we don't find buyers. So even if you bought here and we continue lower, you like the odds that we're not going to continue lower, right? Because you understand like the history doesn't support this market trading below this level. Okay. So since we tapped into that level, what have we done? We've simply tapped into this level, put a higher low in, and we've been rallying ever since. Important, we got above the intermediate high at 20,528. And now we're pushing into this supply zone area that we talked about that, you know, I thought would, like the rest of the world, right, that the market would at least struggle here. We're not even struggling. We're getting to these levels and we're consolidating at them. We're trapping more and more bears, and then we're just aggressively pushing out, which tells me that the market's targeting its year to end date, or at least like, you know, something much bigger than what you think, right? So I think the year projection on the S&P is like 6,600, and we're not even at 6,000 yet. So we could continue to rally aggressively before we actually sell down. For those people, including myself, that thought, hey, you know, we sell in May and we, you know, come back later. Well, that wasn't true, because actually this month, this May, was the most bullish May we've had in over 2 decades, right? I think this was like a 23% month or 24% month. That's the May has never been May has never been more bullish in over 2 decades. So that just goes to show that the market can be, you know, the market can be irrational longer than you can remain solvent. Because if you dealt with well, we're supposed to sell off in May, it's like, yeah, okay, that's what your favorite guru is telling you. That's what, you know, the stats are telling you, but you got to go with what the chart is telling you. If the chart is saying we're going higher, I don't care what the statistics tell me. I'm telling you what live price action is doing. And if you go against this, you're gonna fail, right? All right, so moving on to the daily time frame. Again, everybody's going to be focusing on what they believe potentially is a double top here. I don't think it's a double top, for the simple fact that we have this huge gap right here in price and we're still in an uptrend. Instead, I view this more so as a bull flag, right? Where we have our pendant here, right? And then we have our little flag that's forming here, right? So, or I'm sorry, the flag would be the opposite way, but it'd be coming down this way, right? And then we're popping up, going higher, right? So this right here is very bullish. I mean, there's no other way to put it, man. Like you can sit here and try to analyze the bearish side all you want to. Like I would just completely disagree, right? Until the market shows me it wants to do something. What I would say is that it can offer more downside back to this gap. This new week opening gap is important because not only is it an in wall, but it's also the previous high, and the NASDAQ has yet to retest the previous high. So yes, we do have a break of structure here. We have a push above the high. So now you anticipate the market trading down, sweeping these lows, coming back in to close this gap and retesting these highs. But I wouldn't be looking for that to be the ultimate downside move. What would change my mind is a closure below 19,684. We get below there and we start failing back at this level, then that will change my mind in regards to the bearish activity. Right now, I'm just not seeing the opportunity to be a bear for too long. Temporarily, absolutely, but for the long haul, not right now. This week, where we are, yes, I'm looking for shorts, because anytime we finish the week at the high, I'm definitely going to be looking to short the market, anticipating more upside the rest of the week. All right, so moving down to the 4-hour time frame on that of the Nasdaq, let's bring out these levels, and I can tell you kind of where I'm looking for price to head on the week. All right, so on the Nasdaq, important levels, we're sitting between, again, like I told you guys, we're sitting in between huge levels. We have our daily fair value gap, a 4-hour fair value gap, we have a monthly fib, we have a 4-hour fair value gap below us, and 11 made in wall. This is also an in wall here, but I like the 4-hour fair value gap, so I left that as opposed to the in wall, right? So what are we looking at if we want to be a bull? By now, you should already know I'm expecting the market to trade down to be bullish. So beneath us, we have a monthly fib and an in wall. So I'm looking at the in wall at 20,397, which is this orange box down here, to be the target to the downside early on in the week. If we hit this level, then I'm looking for the market to push back up 5.93%. That's the weekly projection over the last 8 days, finishing off at 21,609.50. If we can't trade down that far and we only want to tap into the 4-hour fair value gap, this would make plenty of sense because there's the monthly fib right here, or 50% of the previous month's close, right? So 50% of the previous month's candle since it has recently closed. So now we're looking at the 4-hour fair value gap in the middle of that at 20,661. The market trading down to go up 5.58% or 5.85%, targeting these highs up here, and then potentially going into this daily fair value gap. But the 5.85% data high sits at about 21,870.50 for our weekly projection over the last 8 days. Now, the opposite is true if I want to be a bear. I want to see the market trade up to these levels first, right? First targeting the daily fair value gap. Running this high, right, after running these lows makes sense structurally. So if we run this high, what's next? It's the daily fair value gap. If we tap into this area, I'm looking for 5.49% to the downside by Tuesday or Wednesday, heading back down to 20,875.75, 5.49% weekly projection on the week. If we can't get back above this high and we choose not to sweep this high, instead we use the 4-hour fair value gap created here as the resistance, then I'm looking for the market to trade down 5.6% back down to the in wall at 20,382.25, right? So those are my levels for the Nasdaq. And again, if you guys want to watch this video over, it will be separated into chapters. We'll move over to the next instrument, then we'll talk about the news and the volatility index. All right, bringing us over to the Dow Jones on the monthly time frame, we can see again, not to repeat it over and over and over again, but I am separating into chapters. So we have again a bullish finish to the month of May. Slightly getting above the previous high would be the Dow Jones, taking its sweet time down here, but it's at the same time accomplishing the same thing, right? We finished the month higher than the previous month on the close, right? It's slight, but it's higher than the previous months, right? So that's bullish. That's not bearish. Not to mention the lows have no wick and they did not trade into this candle whatsoever. That is bullish. No matter how you want to see it, it's bullish. We look over at the 3-month candle, and yes, we're not as aggressively bullish as that of the Nasdaq or the S&P 500, but it's still bullish nonetheless, right? We are still aggressively grinding back to the upside, and we appear to be targeting 45,000 or 46,000, which is the all-time high. We bring out the 12-month candle, and you can see that it is in line with the 12-month candle. 7 months left in this candle, so plenty of time to have a little bit of a balancing act in between January last year's candle. So overall, you give the nod to the bulls because the bears just are not showing up to the party. We come down to the weekly time frame. Again, we look at the same structural basis as we did of that of the Nasdaq and the S&P 500. We look at the lows here. We look at this most recent intermediate high, and we can see we are struggling to get above it, but we're consolidating right at it. One thing that I've learned from people that I trade with, because I never had this thesis, right? But consolidation at the highs inside of an uptrend, I used to think was bearish, right? I'd be like, oh yeah, we're consolidating, we're absorbing price, we're going back down. Like after reading price and back testing and watching the consolidation and really studying it, the more we're in an uptrend and we start to consolidate at these highs, what is everybody looking to do? Everybody's looking to short this, and then this is when you get those aggressive candles that push by, because if they're short here, where are their stops? All of their stops are back here, so the market's going to aggressively push through those stops. They're going to close aggressively and in panic. Now the fear is here, and then the market has the power to push higher as these people start to close higher and higher, right? So consolidation at the highs on the Dow Jones on the weekly is not bearish. It's actually very, very bullish. So we'll see exactly how it plays out, and we'll come back to that. And again, currently, unlike the NASDAQ and the S&P 500, what I will say about the Dow Jones is it's building really nice structure where it may not need to pull back as much as the NASDAQ and ES probably will. Because if you look, these gaps, these new week opening gaps that were created on the Dow, they're actually been filled on the way up, which when something gets filled, gaps get filled, the market doesn't necessarily need to go back down there and close it because it's not an inefficiency anymore. The price has been filled in that area. Will it still go back there? Yeah, because it could still go back there, it's support or it's resistance. But ultimately, that's good structure being built right there, right? And you can see every single gap on the Dow Jones is being closed on the way up. That is extremely bullish. But for the time frame right now, we have a break of structure here. You can't deny that. And we have a failure to get back above these highs. But again, we have that consolidation at the highs, which is what you don't want to see, right? They've created a range right here, right? And as much as we're failing, we're still holding the range. If we stretch this out, we're essentially looking at yet again another bull flag where the market is just consolidating, may manipulate down, but it could just gap right up, right? So we'll see exactly what it does. But ultimately, what I'm trying to illustrate here is that this consolidation is still bullish, right? Because this is a break of structure, but so is this green candle right here, right? We broke these lows, we came down, created a new range, and then we broke above the high. So now we're still in bullish character on the right side of price, not the left side on what previously happened, right? So again, if you're a bear, I apologize, but I just don't have anything for you right now. Like I just don't, because trust me, I like being a bear too, but I also like being on the right side of price more than anything, right? So for our time frame, let's bring out our levels for the Dow Jones. And again, we'll go over the news and then we'll get you guys out of here after we go over the VIX. All right, looking at the Dow Jones, the things to note is again, in-wall above us, 1 hour fair value gap, monthly fib here, and then monthly settlement beneath us. Above us, we have an in-wall, we have a daily supply zone, right? And then I think all the way up to the highs, we have a 4 hour fair value gap. If you want those levels, just add me in the Discord and I can repost them or just draw them out for you. But all right, so what are we looking at? Again, not to beat a dead horse, but if we want the market to go higher, it needs to go lower first. Well, what's beneath us? We have a 1 hour fair value gap that lines up with the monthly fib. I really like this thesis. We trade down into this level at 41,929, give or take. And then we rally 4.19%, which is our weekly projection for the week over the last 8 days. We rally up and we push into 43,679. Our chessboard low sits right here at the green box. This level sits at about 42,129, which would be the next level that I would anticipate the market trading down to in order to pop back up and targeting 43,880. Now, the 4 hour fair value gap is up there as well. So it wouldn't surprise me at all if we finish at the high and then drop back down to this daily supply zone after hitting these highs. So maybe we get an aggressive push up to start the week and then we start to trade back down the rest of the week, right? So that being said, we have a daily supply zone here and we're in currently a potential downtrending market, not downtrending market, but a break of structure we got here. We got a failure to push back above. So if we come back up and retest, mind you, I didn't mark the fair value gap between here, but there is a 4 hour fair value gap between here. But I would like to see the market trade back into the daily supply zone at 42,858, right in the center of it, like run these highs, right? And then push down 4.10% into 41,108, or push into the daily supply zone right back at the tip, give us a nice little double top or triple top up here at 42,744, and then push down to 40,985. I would note, like I said, I did not mark the 4-hour fair value gap. I'll probably clean that up before the actual start of the market. We have weekly fib and daily fib sitting right on top of each other. So ultimately, I think this should be a great week in regards to expansion. I'm expecting some very good volatility out of the market. And I'll start with the news to kind of illustrate exactly why. This is one of those rare weeks in the market where every single day going into the news, right, in regards to the news, every single day this week, we have red folder news, right? I don't know. Usually red folder equals, super volatility, but take it how you want to, right? But every single day this week, we have red folder news. We start off with Monday, ISM manufacturing. We got 10 o'clock news, red folder, right? We also have a multitude of FOMC members speaking, including Jerome Powell himself, inside of the PM session at 1 o'clock. That's going to be red folder just because his name is on the docket. We go into Tuesday. We have the JOLTS report. Again, 10 o'clock news, red folder, right? That's going to move markets. The market's going to pay attention to that. That's going to be 10 o'clock news on Tuesday. On Wednesday, we have final services, ISM services, PMI, red folder news right at 10 o'clock. Every single day this week, right? Not to mention at 8:15, we got don't fade the private non-farm payrolls, right? Like that's usually going to move markets as well. But every single day this week is going to be important. Thursday, we already know that that's guaranteed to be red folder news because we got unemployment claims every single Thursday. You're going to get that. So that's an automatic given. Then Friday, we end the week with more red folder news and probably the highest one on the volatility scale, which is non-farm payrolls at 8:30. So strap in this week, batten the hatches, size up, size down, do whatever it is you need to do, but you better be managing your risk because this week is going to be volatile. Now, taking it back over to the charts, last but not least, we have the volatility index, right? And we can see on the volatility index from the monthly time frame, again, still inside of this uptrend. And let me tell you something about the VIX, right? The VIX is going to hold this level, right? The VIX is not going to break below. I'm not going to say not. I'm just going to say it's very, very rare that the VIX breaks below 14 or 12, right? So as aggressive as we're coming down, I'm cool with us coming down, but I'm telling you right now, I'm a bear anytime the VIX gets into this yellow box, period. I don't care what's happening in the market. If the VIX comes down to the 14s or the 15, Hobbs is going short somewhere. I'm going to find a way to get short because the VIX, this is the monthly candle, right? Look how many times we come down here on a monthly time frame and we've never broken below these levels, right? So as far as where we are right now, this is why I think the market may do somewhat of a balancing act unless it can break to the down or the upside. I would prefer that the VIX aggressively drop, right, to start the week, because that's when it'll tap back into these 14s or 15s, which means that the market could aggressively pop up, right? The VIX goes down to start the week. The market pushes up to start the week, aggressively pushing into the 14s and 15s. We get some type of aggressive red folder news, or Trump sends some type of tweet when we hit those levels that I've aforementioned. And then boom, we get a rejection off the highs, right? Right when the VIX hits 14. So the VIX can make its essential big pump back up to put in that lower high. And then we just do this balancing act with the VIX. So that's kind of how I'm looking at the VIX, and how I'm going to be using it to support my thesis going into the next week. So that being said, I hope this top-down analysis has been helpful. Look out for part 2. I'll do that privately with gold futures and Bitcoin futures. So if this is helping you guys out, please don't forget to tip the barbers, all that good stuff. If not, it's all good. Watch the video, hit the dislike button. It really doesn't matter to me. I do this for myself, my Discord members, and then for YouTube people, if they catch on, then great. But that being said, my name is T. Hobbs. This is The Trader Shop. I'll catch you guys on the next one, man. Peace.